and welcome to Blocks Live TV. Today is Friday, April the 12th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City and 2:30 p.m. in London, 10:30 p.m. in Tokyo and 3:30 p.m. here in Malta. Well, the total market capitalization has been on a slide after recording a fresh high for the year at just over $186 billion on Wednesday. It has currently stabilized after $16 billion were wiped out from the market. The cryptocurrency index CCI 30 has pulled back sharply to move south of the 3,000-point mark. April's gain has moderated to 13%, and the index is up by 36% year to date. The 30-day Bitcoin volatility index has once again remained unchanged above the 3% mark. This is where it stood since jumping by approximately 2% in early April. The CoinMarketCap website's 24-hour traded volume indicator has once again moved south of the $60 billion mark. The Messari website's so-called Real 10 volume stands at just over $2.1 billion. The Bitcoin dominance indicator has edged back towards the 52% level during the most recent market correction. It has previously dropped to just over 50% as the altcoin season kicked off. The top 5 digital assets are all trading in the red. Bitcoin has dropped by approximately $400 after printing a fresh high for the year at more than $5,400 on Wednesday. Now, it took a while for the Crypto King to break above the $5,000 resistance line, and it currently acts as a strong support level. Ether posts a daily decline of close to 4%, and the top altcoin has found support around the $160 territory. XRP has given up most of the gains accumulated so far this month, as it dropped towards the 32-cent level. EOS, which returned to the top 5 rankings this week, currently trades at $5.30 after testing the $6 resistance level on Wednesday. Now, Litecoin saw resistance at the $90 price level on Wednesday, and it's since dropped below the $80 mark. The Coin 360 heat map is a great tool to highlight just how bearish the day is on the market. Now, we are seeing red across the board here as well. According to the Token Spread website, the Kraken and CEX exchanges show the biggest buy and sell side difference of close to 1.5%. The CEX exchange posts the top single market spread of 0.13%. We'll now take a look at some of the characteristics of the Worldwide Asset Exchange and its WAX token. The platform claims to be the safest and most convenient way to create, buy and sell and trade virtual items to anyone, anywhere in the world. The main issue is that the project is looking to address gamers purchasing virtual items. This is done by creating a secure and effective marketplace for this multi-billion-dollar industry. The WAX token supports all activities and functionalities. The digital asset jumped to its all-time high of just over $5 in late 2017. It can currently be purchased for approximately 8 cents. We'll now take a look at some of the performance of the 5 major asset classes of cryptocurrencies as categorized by the Messari website. Starting off, the infrastructure group is one of the best performers on this Red Friday, with a decline of less than 5%. Infrastructure assets are trading lower across the board. The media and entertainment category is down by more than 5%, and this asset class is mostly in the red as well. The financial sector is the worst performer today, with a drop of close to 6%. Algor's REP token bucks the trend with close to 4% increase. The currency category has dropped by close to 5%, and Dancoin is one of the rare coins that's trading in the green today. While lastly, the services section shows a similar drop of nearly 5%, as the bearish sentiment is driving this category as well. So this is how the digital assets have performed so far on Friday based on their use case asset class. We'll now focus on the most significant moves among the top 100 cryptocurrencies to find out what top gains and what the biggest declines are. Now, just 15 of the cryptocurrencies are trading in the green as markets are retreating from the recent highs. The Crypto.com chain token is having yet another bullish session with an increase of close to 15%. The asset is testing the 10-cent resistance level after doubling in value over the recent days. As reported yesterday, the project donated more than $500,000 to a Binance charity. The True Chain token is up by double digits as well, to trade at just under 85 cents. The asset spiked above the $1 mark earlier this week. The Nebulous coin is up by 6% to trade at $1.26. It has rebounded after crashing towards the $1 mark earlier in the week. The BitTorrent token moved sharply south yesterday, and the asset has rebounded by 4% over the past 24 hours. The Walton Chain token wraps up the gainers chart with a gain of more than 4%. This comes as a rebound after the token slipped below the $2 price level on Thursday. Now, the majority of the digital assets are in the red, and there are a couple of double-digit drops as well. The Maxim coin is a top decliner with a slide of 11%. The altcoin has been on a move south during the past week after surging above the 10-cent mark. The volatile ABBC coin is also down by 11% to trade at slightly less than 24 cents. The asset has been retreating after jumping above the 36-cent mark earlier this week. The KuCoin shares token is down by 9% to trade the $1 support level. The past 7 days have been bearish for this token as it's lost nearly 40%. The Bitcoin Diamond coin has depreciated by 9%, and the asset is hovering just over the $1 support line. The bearish movement has continued for the Maker token, which is nearly 9% in the red. The asset is now on its way towards the $600 mark. This is after failing to break through the key $800 resistance level. Well, these are the top 24-hour moves during the European morning trading session on this Friday. Join us after a short break where we'll be joined by our crypto experts to discuss the biggest moves in the market.
There are 180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We're back with today's Crypto Now live show. Now, joining us on the line, we have Jason Fernandez, COO and co-founder of AE Token, and Jeff Hancock, COO and co-founder of GetFIFO Exchange. Thank you both for joining us on the line for this Friday's show.
Hi, Jessica.
Great to have you both. Now, Jeff, we're going to start with you here because we are seeing the cryptocurrency markets. Total capitalization has actually lost more than $15 billion. Now, Bitcoin slipped below the $5,000 level briefly. As we spoke about yesterday, there will be a lot of battling around this level. How important is it for Bitcoin to hold this ground above the $5,000 mark?
Well, I think to bring positivity to the market and keep it there, people, everyone wants to see it stay above 5,000. What we saw in previous months was this: the volume in the market was still there, but we saw this increase in compression of trading activity and price movement. So now that we've had a pop up to 5,000, and we've seen as high as 5.5, 5.6, with people taking profits and still trading their positions, it's quite natural to see it come down again to the 5,000 mark. But being that 5,000 is a very big psychological level, I can still see the market tracking sideways for a little while. But while we still stay up at these levels without crashing back through, I think it's still a positive sign of the market.
Okay, and Jason, what's your thoughts as well? How crucial is it for us to hold this $5,000 mark for Bitcoin?
Yeah, I agree. I think that as long as Bitcoin stays over 5,000, it's a really important philosophical mark for a lot of people. It's sort of tied to that number, so also rather psychological mark for a lot of people. Additionally, as long as it's above 5,000, the bullish chart structure will be intact. So the indications, even from a technical analysis point of view, still sort of indicates that things are going the right way. So as long as it's above 5,000 and it continues to have trading activity, trading interest, it should climb back up to 5,200, 5,300, and then 5,500. Like I said, 5,500 and 5,800 would be the next numbers to look at in the future.
Okay, great. Now, I want to ask you both, and Jason, we'll start with you on this one. 2020 is only around 8 months away. Various crypto experts are going public saying Bitcoin will actually reach $50,000 by 2020 because of various things like the Lightning Network and other developments. Is this a sensible prediction, and how can this be further fundamented?
So I don't think 50,000 is a realistic estimate. I think it's unlikely that Bitcoin will even get back to 20,000 this soon after it's had a precipitous drop. And, we've seen a lot of people get burned pretty badly on Bitcoin. I highly doubt this is just going to jump back up even to 20,000, even back to the numbers that we saw. I think the road to 20,000 would be a slow trudge. I could see 15,000, maybe 15,000 by the end of the year if things go really well. But any more than that, I think, would be a stretch. Yes, the Lightning Network is going to really do a lot to ease adoption. There's a lot of fundamental factors that are slowly moving towards increased Bitcoin adoption. So we've seen, like I said yesterday, we've seen record active wallets. We've seen quite a bit of transactions up to basically 2017 level. So there's a lot of fundamental signs that point to a really bullish outlook, but I think 50,000 this year is not going to happen.
And Jeff, what's your thoughts on this? No one really knows what's going to happen in the crypto markets. 50,000 by 2020. Are you seeing that as a sensible prediction? What's your thoughts?
Well, 2020 is obviously a big number, and 2020 is a whole year. So if you say the beginning of 2020, then I'm inclined to agree with Jason. But if you say towards the end of 2020, then anything's still possible. If you go back and look at some of the history of some of the bubbles and busts, the ups and downs of Bitcoin price movement, we saw these 100, 200, even 300% rallies, then drop 80% of their value. That's kind of where the bottom we are right now. So if you take a different standpoint and look a little bit further out than just the beginning of 2020, but possibly the end of 2020, then it could be possible. But what I feel, because Bitcoin's got a lot of, it's got Bitcoin dominance, or if still over 50%, there's more market attention, there's more news. I think there's going to be more profit taking on the way up. I don't think people are just going to buy and hold and kind of suck all the liquidity out of the market. And I think it's going to be a much more gradual rise to all-time highs. And it's just going to take longer.
Okay, fantastic. And now if we look on to a South Korean exchange, and Jeff, we'll stick with you to start with this one. According to a report by a South Korean exchange, Bithumb posted a $180 million net loss last year, mainly due to this bear market that we have been discussing. Is the solution likely to change this year, as we are seeing, and you did mention, trading volumes are on the rise?
I think it's possible. I mean, they listed a 180 million loss. They did have a lot of staff cuts. They had just done a large push on new infrastructure, and all those culminated off the back of the bull market. And the best time to do your upgrades and to tighten all the bolts, etc., is when there's less activity. So while they're posting a loss now, I don't think it's definitely the end of what they're trying to do. If you go back and look, they made several hundred million more the previous 2 years, so it's kind of a drop in the ocean for them. But I think with increased activity around Bitcoin, around other types of investing, we've seen IEOs and all the other kind of stuff. It's going to bring more people to the market, and as an exchange, we have to keep innovating and serving these customers in various ways. So I think they'll be fine as long as people keep trading like they say they're going to trade. Then I think they'll be just fine.
And that's the key phrase there, is actually keep trading. So Jason, I'll ask you the same question. Are you expecting the situation to likely change this year as trading volumes are on the rise, what we have seen there?
Yeah, I mean, a lot of exchanges are actually coming out with tokens, and they've created the tokenomics of in such a way that the more transactions that occur in general, the more money they make, and that's actually been a growing trend. So as long as that starts to happen, there's going to be more and more cryptocurrency exchanges that are doing better. But I think overall, we're likely to see some consolidation in the whole cryptocurrency exchange market. But yeah, as Jeff pointed out, 180 million is a drop in the bucket compared to some of the revenues that they're seeing. So I don't think it will really affect them too much. But I think overall in the market, we're going to see some consolidation among the exchanges.
Okay, fantastic. And we are still seeing a lot of exchanges do a lot to attract new customers. So, Jason, we'll ask you, could this be an indicator that the real traded volume is not even close to the record high that we have seen on CoinMarketCap website? And we have discussed this a few times. What's you taking it from an exchange perspective?
Well, I certainly think that the real traded volume is not close to the record high that we see on the CoinMarketCap website. But I'm not really sure that that's the only thing that that's driving this sort of race for customers towards exchanges. I think a lot of exchanges are also realizing that that this is sort of one of those markets that's going to see a lot of consolidation, and I think a lot of people don't tend to change their exchanges. If they're happy where their money is in a particular wallet, they don't tend to move exchanges a lot. So it sort of then becomes a race situation where each cryptocurrency exchange is trying to get the most number of users and then probably hold on to them because they figure it's probably easier to hold on to them than re-attract them. And now it's sort of a war to try to figure out who can attract the most new customers. And so that's why you're going to see a lot of offers, and Coinbase is doing things, and CZ is doing things again over at Binance. So there's a lot of things that exchanges are doing to attract customers, and that's basically because they feel once they get the customer, they're going to retain him, and that customer is going to spend some money.
So maybe exchanges are also optimistic that more people might be entering the space as well. Jeff, what's your take on this?
Well, I think at the moment between certain exchanges, depending on what you actually do, if you're more of a brokerage style like we are, we're a fiat on-ramp, which is an extremely high barrier to entry. But if you're doing more of a trading sort of platform like your Binance's and your Coinbase Pro and your Krakens, etc., then competition is fierce. People are sort of treating exchanges, I suppose, as if you were going to stay at a hotel. You're coming to an event in London. It's going to be on Park Lane. You're going to go look at the hotel prices first and look at the quality and their features and offerings second. So people are always focusing on price and always focusing on fees and how these are marketed and how they're dressed up. That's how some people some of these exchanges are capturing the audience. But I think the exchanges that have a really, really good niche and focus in on one particular service or product, just as Jason said, will hang on to that person long term.
And Jeff, you are calling from the UK. We have to talk about Brexit. It has been the talking point of the week across all news organisations. We have to touch on it as well. It has been all over the news for years now. It's been delayed to take place on Halloween this year. Now, this could significantly affect the sterling. What are the implications on cryptocurrencies? We have seen Binance Jersey and now Coinbase Card actually launching in the UK. So I want to ask you your insight on this. Are we seeing these companies betting on Brexit?
Well, firstly, Brexit being on Halloween is possibly going to be the best Halloween ever. I mean, the streets are just going to be full of all of the Theresa May faces and everything else that goes with it. But when we talk about crypto specifically, the UK market is still actually really strong. I mean, just here in London specifically, and places like Manchester and Birmingham, a lot of meetups happening, a lot of really strong networking groups, a lot of people talking crypto, a lot of people doing development. And we start talking about Binance and Jersey. I mean, while it is it's a UK kind of domicile, it's its own little regulation over there, which is very favorable for running an FX business or running some sort of trading business. And Coinbase with their cards, that's based on a third-party provider. It's not their own product. I think they're simply capitalizing on their market share. What they're trying to do now is trying to fill every gap of the industry while they have excess capital, while it's in a bear market, while they have time to break it and test it and get a nice long spread. And they're literally just trying to do everything they can to make sure they have a full service offering. So Binance, when they first did the fiat launch, they did it in Jersey. But if you go on there and see, they don't have a lot of volume yet, because a lot of people either like Binance or don't like Binance. with Coinbase. They're saying you can spend crypto on debit cards. I don't know anybody that would want to spend their crypto. I know people that want to buy crypto but not spend it. So I think they're just kind of gearing up for things that are going to get bigger and get better during the next bull run.
Interesting, because you are on the ground in the UK. So are you seeing that actually a lot of people in the UK weren't particularly interested as much in the Coinbase launch the UK card as maybe people and the media was reporting?
Yeah, so it was interesting that the first 1,000 people were going to get a card without the $4.95 issuing fee. And the day it was launched, I believe it was 2 days ago, at 4 or 5 p.m. in the afternoon, people were still getting the offer. Now, 1,000 is not a big number, especially in the UK, but it was UK and Europe. Which means, I mean, the appetite for it alone must have been low, or the love for Coinbase is even lower. So I don't really know. But I mean, if you look at the product and who the product is built on top of, they're built on top of a product called PaySafe. And PaySafe look after Skrill, they look after NetTeller, they have a lot of products that sit on top of that stack. And their direct competitor with that is a business named Qantas. And Qantas is what Wirex is built on top of. So you've got two competing third-party platforms with now two competing kind of card technologies. And I think Coinbase is literally, like I said, just building a product to, you know, fill that kind of space.
Fantastic. And Jason, finally, we're going to turn our attention to you. We're talking Binance Launchpad as well. It has started a new trend. It appears to be gaining a lot of traction lately, with many exchanges announcing similar services. So since we're having two cryptocurrency exchange experts on the show today, Jason, we'll start with you. Could you please let us know your thoughts on initial exchange offerings? How are they different from ICOs?
So initial exchange offerings, IEOs, have gotten a lot of attention lately. Binance Launchpad have been really successful with a couple of exchange offerings. So as I mentioned earlier, there are a lot of new exchanges coming out. So a lot of them is basically issuing their own tokens for their own internal use. And of course, with an ICO, it's sort of different. The tokens are used as a utility within the system, but in some cases, with the IEO, it's sort of used to get discounts and so on. I'm not really sure I see what the big hype is about. There is certainly a lot of interest and a lot of people putting money there. I'm not really sure how much value it necessarily adds to have a whole bunch of new exchanges.
And Jeff, is there anything that you would like to add on that as well?
Yeah, I mean, the ICO originally, it was the whole point of being decentralized, and that you could decentralize trust in getting into a product or a company when it was first started. You know, so if you wanted to get into Facebook, good luck. You had to know the right people at the right time to get in on the ground floor. And ICOs were supposed to open that up to everyone. And then we saw it being abused. We saw people running off of cash. Now, the IEOs is essentially bringing that same concept, but bringing it in-house, kind of like an IPO, doing a stock raise or something like that. And I think in principle it can work, because you're bringing huge liquidity to the masses. You're bringing a launching platform. You're bringing marketing. You're bringing kind of all the right people to the table at the same time. What I don't agree with, and I think it's just it reeks of it being a bit scammy, is that the only way you can buy the said token that's on the Launchpad is with with the exchange's own token, which artificially pumps their own price. What I think would be a lot more fair is you can still use the exchange to launch it, but create more pairs. Make it so people can buy it with Bitcoin or Ethereum or Stellar or whatever else they want to. Just don't lock people into a single token. And that's where I think the conflict is.
Thank you both so much for clarifying that and our other subjects today. Great to have you on the show as always. Thank you so much for your time this week, and have a great weekend as well.
Thank you very much.
Thank you. Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. So the total market capitalization has moved north of the $170 billion level as a majority of the digital assets shifted towards the green side. Trading activity has slowed down, and the CoinMarketCap website's daily traded volume has eased back towards the $50 billion zone. That's all for this Friday's Crypto Now live show. We thank Jeff Hancock and Jason Fernandez for their expert analysis. I'd also like to thank you, the audience, for joining us, and invite you all to accompany me every weekday at this same time.